Hello and welcome back to DukascopyTV. I'm Monica Gibson, and joining me down the line is Patrik Lang, Head of Equity Research at Julius Baer Group, to discuss the luxury goods market. So Patrik, what in your opinion are the main factors affecting this market at present?
Okay, I mean there are two major factors which affect demand for the luxury market. Structural, long-term one, which is connected to increasing wealth, in the developed world as well as in the emerging markets. That's a long-term structural trend which has been in place for the last decades and will also be in place for a very long time going forward. Now, besides this structural trend, there are also cyclical trends which are pretty much connected to global GDP growth, which means there are cyclical upturns and downturns, and that's of course also affecting demand for global luxury products. Now, in the current situation, I would say the major factor to watch is actually GDP growth in China, which has been a major driver of growth in the luxury space over the past few years, and also a major source of growth within other economies. Demand or growth in China is clearly beneficial for Switzerland, for economic growth in Switzerland or in Germany or in other export-oriented industries. It's very important for commodity prices and therefore drives growth in other emerging economies like India or Brazil. And therefore, China is pretty much an important factor for the global growth environment in general. So therefore, currently, I would clearly point to GDP growth in China when it comes to the question, what's the factor to watch?
According to reports this week, sales growth in global luxury goods market will slow this year to 5% from 13% in 2011. On the other hand, some experts say South Africa's market is expected to grow 20 to 30% over the next 5 years. Do you agree with this? If so, what will be the deciding factor allowing them to buck the global trend in your opinion?
Yeah, I think global growth will also affect GDP growth in South Africa. South Africa is pretty much a commodity-based economy, which grows in the case of increasing commodity demand, increasing commodity prices, and therefore pretty much depends on GDP growth perspectives in China. So I don't believe that South Africa can decouple from the global growth environment. I think if we are in a healthy global growth environment, South Africa will benefit from that, and the luxury demand in South Africa may even outpace global luxury demand. But I don't think that South Africa can decouple from the global growth environment.
The slowdown in China is bound to affect the luxury goods market, but with 40% of total luxury sales made up with tourists, isn't there still room for this luxury industry to thrive?
Yeah, demand from tourism is a very important factor for the global luxury sector, especially for the big European brands, for the watchmakers, and for the soft luxury companies, like Gucci or Louis Vuitton, who sell handbags, in large amounts to tourists, especially to Asian tourists. But tourist flow, of course, also depends on the global growth backdrop. It still is a growth driver. If that will remain the case, pretty much depends on the outlook for the global economy. So again, just like South Africa, I also believe that tourist flow depends on the global growth environment.
Concerns about market weakness are somewhat overblown, according to an analyst from Bain & Co. Do you agree with the suggestion that perhaps the biggest reason for disappointing luxury goods sales is failure to keep up with change of pace in the market, tastes and demographics?
I would agree with that as long as it comes to structural growth. So in the long term, these cyclical downturns or upturns do not really matter. because the structural growth characteristics are in place, and for the long-term perspectives of individual companies within that growing environment. Of course, the factors you mentioned are the relevant ones to watch. The ability of the companies to keep up with change of pace in the market, with tastes and demographics. However, in the short term, these trends can be overshadowed by cyclical up and downturns. So I would agree with the statement, as long as it's related to structural long-term movements. In the short term, also the global growth backdrop can have a material impact on the success of companies.
So finally, Patrik, what is your outlook for the luxury goods market going forward?
I'm quite positive with regard to the structural perspectives of the sector, of luxury products in general, also luxury art, for example, or luxury food, or luxury cars. I think there will be structural growth for high-quality products. And I'm also relatively optimistic with regard to the short to medium term outlook. It's true that growth has slowed down this year compared to previous years, which is, I would say, a normal mid-cycle correction. I don't think that we will head into a crisis similar to the one we had in 2008. The cyclical slowdown has been driven by a slowdown in Europe, with as a result of the debt crisis in Europe, and those had some contagion effect into our regions, especially China. I think that we are already seeing, those markets bottoming, and the growth rates to accelerate again. So I still think we're in a mid-cycle correction, but over the next 12 months, we believe that growth rates will re-accelerate from current levels.
Patrik, thank you for your perspective today. Well, sadly that's all we've got time for at the moment, but keep yourself up to date with all the market's performance by clicking back to Dukascopy. Bye for now.